AMC stock currently down about 8.56%, looking to close out the end of the day. We are fighting hard and finding support around the 100-day moving average. This is something we talked about in the last video that can give us a pretty clear sign if this bullish trend is going to hold up. So it looks good as of right now. We'll see where the close is. $15.55 per share is that key level that I want to see AMC stock close out the day at. On top of that, you are seeing the cost to borrow rates jumping up again today, with the cost to borrow max almost up 100% day over day. So we have a lot to talk about in a short amount of time. Hit the like button, subscribe to the channel, source your comments, questions, or concerns down below in the comment section. Most importantly, thank you guys for tuning in. And let's get straight into it. So what is happening today? If you guys are unaware, it was Snapchat earnings. The fact that Snapchat down 35 to 38% a majority of the day. Well, it's not because Snapchat is a bad business. They're actually growing their daily active users. They're actually growing the number one aspect of a social media growth company should. Their daily active users, their monthly active users. But what is actually happening is the markets are fearful about advertisers pulling back. And what that is doing, it's feeding into fears about Facebook and Google, potentially Amazon and AWS advertisers pulling back. Less activity from advertisers is a sign that not as many people are spending as much money as they previously did to advertise. So the consumer is not spending as much money, because if the consumer is spending a lot of money, well, why would you not go out and advertise even more? After all, advertising is a tax write-off. So that's the long story short version of all of this. And if you look at the key stocks, Microsoft down 1.5%. Take a look at Apple down 0.58%. Take a look at Facebook down 7.34%. And even Google down 5%. These are very big drops, and this is what is moving the markets here today. If Apple was down more today, you would have had an even worse day in the markets. Apple only down 0.5%. S&P trying to reclaw some of the loss throughout the day here at the end of the day, but we are still down about 1%. The NASDAQ still down almost 2%. So there you guys have that. If you did not see in the last video that Russia slashed their key interest rate by 150 basis points in shock move, nobody was really expecting that, and that is very interesting, because why would Russia be cutting their rates? Do they not expect inflation at all? Their rates are back down to their pre-invasion levels. So pretty interesting. The Russell 2000 down about 2%. The VIX down a little bit today as well, which is why I don't like to use the VIX as an actual fear gauge. I like to use the US dollar, or you can track this using UUP on Webull or really anywhere else. And depending on what this does, that is the real fear gauge around the world. As you guys can see, this was the COVID crash where the dollar spiked up. Everybody got fearful. Global currencies, emerging market currencies, devalued against the dollar, meaning the dollar went up, global currencies went down. And you can see what happened during 2021. Fundamentally speaking, when the dollar is weaker, you actually can get more bang for your buck if you're doing business overseas. So it's fundamentally a good thing when the dollar is down, not when the dollar is going up. It's quite, contrary to what you would expect. You would expect a strong dollar would be good for the economy, but it's actually the opposite way around. So what you're seeing today is the dollar is down slightly, but we're not falling off enough to get a big bullish reaction. We were down a lot more earlier in the day, and the dollar did start to strengthen yet again, coming up about 20 cents from the low that we've seen. So this is really the fear gauge, and this is what you want to watch, and this is what is affecting foreign exchange rates with, Tesla, IBM, Netflix, companies that do business overseas in different currencies. They convert that back to US dollars, and it's not such a good thing. On top of that, the yield curve still inverted 21 basis points. So everyone wants to know, what is the Fed going to say about this inverted yield curve coming next Wednesday when the Fed raises rates? Obviously, you guys know the game plan already for next week. You got the Fed on the 27th. That is on Wednesday. You do have advanced estimates for Q2 GDP expected to be negative 1.6% the day after that on Thursday. And all throughout next week, you're going to have large company earnings. You're going to get Microsoft, Google, Amazon, Apple. You're going to get all of these larger companies that will have a bigger effect on the markets. I will point this out, and I know it's getting a little redundant and repetitive at this point, but the only thing that really is going to save the markets, in my personal opinion, as of right now, is if the Fed comes out and U-turns and they say, hey guys, we're going to stop raising rates as aggressively. We have done enough in a very quick manner. We need to let people adjust to these new higher interest rates, and we don't want to push the economy into a recession. We think we can avoid that if we slow down just a little bit. If that happens, well, markets are going to rip. People are going to love that. If you get the opposite and the Fed says, yeah, we might have to go more aggressive, or if not, just keep raising rates at a steady pace, well, markets mix that with technical recession, mix that with bad earnings and bad Fed. Yeah, that's a recipe for disaster. And obviously, I'm not a fortune teller, so I don't know exactly what is going to happen. But today as well, you also did get pretty bad earnings out of Verizon. They cut full year forecast, as well as Twitter. They missed on all their numbers, and that was not really a good thing. But that is more so trading around the Elon deal and the court case, and that's going to have the biggest effect on Twitter. So that's pretty much all for, macro stuff for the broad markets. But as far as AMC stock, we didn't get any specific news, but you could see the cost to borrow max is now at 22.65%. The cost to borrow max was about 12 to 13% just yesterday. So this is up almost 100% here today. Cost to borrow average of 9.95%. Cost to borrow minimum of 8.27%. And you are seeing a dollar amount worth of short positions at 1.65 billion. Estimated short interest of free flow 18.8%. Free flow out on loan 27.65%. Shares out on loan 142.53 million. Days to cover 3.4. Cost to borrow 10.17 and 100% share utilization. So nothing too crazy here besides that cost bar max that has obviously jumped today, and I do expect this will probably continue to go higher. Now on top of that, you're seeing some very large option orders coming through, individual orders that are marked as interesting options flow. For July 29th, a $13 call coming through for about $450,000. That is a very narrow time frame here, and that would be considered very unusual. Look at this one, January 20th, 2023, $25 call coming through for $1.3 million. Not only is this hedge fund, whoever it is, betting $1.3 million on AMC, but they're also betting $1.3 million on AMC and betting that the stock will go up at least 70 to 80% from here just over the course of the next 4 or 5 months. So it's not a long-term outlook, for this option. It's very short-term. If you factor in the break-even is actually $27.66 per share. So that is getting closer to 100% that we would have to see an AMC to even break even on that $1.3 million trade. So typically when you see, hedge funds going super far out the money, and I would categorize that as pretty far out the money, with such a large dollar amount, that's something that makes you kind of turn your head to why are they doing that. Hedge funds can afford to buy calls that are deep in the money. Why would you be going so far out the money? It's because you would have a lot of confidence that AMC would do XYZ, in this case, go up in a dramatic way, make your contracts go into the money, and you would make a much higher percentage return on those out of the money options. But it really takes a lot of conviction to make that trade if you are a hedge fund. Now, the probability of a 1% rate hike is currently sitting at 21.9% heading into next week. The probability for a 75 basis point rate hike at 78.1%. So we're only going to get a 75 basis point rate hike. That's pretty well known right now. unless something changed Monday and Tuesday and the market started to actually price that in, but I highly doubt that at this point. And if we look at AMC on a technical basis, I mean, it's been pretty bullish over the last couple of weeks. We can't really argue with what we are seeing. Like I said, you want to see us hold up 1555, and that's literally where we are at right now, right on our 100-day moving average. So I think we will hold that, and that's going to be the most important thing, because usually, obviously, you want to, the stock to break out of a resistance level and then hold support at least at that resistance level you broke out at, and then, continue to go higher from there. So what has happened? We broke out above the 100-day moving average, which was support, and that was at around 1550. Went all the way up to 1837, and then we have since fallen back down to the previous level of resistance. You want to hold support here, and then you can start to make another move back to the upside if and as long as the market conditions still warrant that the stock should be going up, which, based on the option activity, based on what we are actually seeing, I think it's pretty clear that AMC is probably going to keep making a move to the upside. Now, the RSI is at 55.24. This is actually a good thing because it's cooled off, give us a little bit of room, to make another rally before we get close to 70, close to that overbought level. So that is personally good in my opinion. Now, the MACD is still bullish, but starting to curl down, and we'll see if that ultimately does go bearish. So that is going to be all for this video. That is what you guys need to know. Not too much else, not a very eventful day. Just really that hangover effect, that continuation from Snapchat earnings. So that is it. Hit that like button and subscribe to the channel. Source your comments, questions, or concerns down below in the comment section if you guys have any. Thank you for tuning in. Enjoy your weekends, and I will see you in the next one.